All right. Hello, everyone. Thanks for tuning in. So, I want to talk about a stock that got my attention, which I think could be set up for a pretty decent rebound here. Turns out these guys are right in Stanford, where I am. But anyway, as I always say to my community and my students, as traders, we want to look for extremes because big part of trading is based on this concept of reversion to the mean. So now look at the bottom, this indicator down here. This is the what we call the RSI indicator. This measures momentum. Momentum is basically how far something has moved from time period A to time period B. If something gets to an extreme on the downside or on the buy side, we call that oversold or overbought. The reason why this is important is because this is going to draw buyers or sellers into the market because they're going to be expecting a reversion. Now, here's ISI. So I assume these guys went public back in '07. This is like, I think, the housing crash. We almost got there, but not quite. So this, according to this RSI indicator here, this is the most oversold this stock has ever been since it's been public. All right. As traders, we look for historic stuff. I mean, we saw that CVS was the most oversold since it had been since 1987. A few weeks ago, we made some money on that. All right, so that could draw some buyers into the market here. The other thing I want to point out too is this is another way that traders look at stocks that are overbought or oversold. This blue line here is what we call a Bollinger Band. This is two standard deviations below the 20-day moving average. Why is this important? Because according to statistics, at least what they tell me, because I'm not really a statistics person, 95% of trading should be within two standard deviations of the mean. These days, a lot of these algorithmic trading strategies are based around statistics. So the fact that this share price is more than two standard deviations away from the mean is going to get the attention of these programs and algorithms and so forth. And they might come in and start buying. Now, as always, I always tell the community here and my students, like, we don't want to buy it just because it's oversold. What we want to do is wait for it to start to rebound and then jump in. How will you know it's going to start to rebound, or what could be some triggers for actually entering the trade? We close back above the Bollinger Band, which shows us that conditions are getting back to normal. In other words, the stock's been crushed because it's really oversold. Sellers are aggressive, emotional. All right. When these conditions start to wear off, things get back to normal. It could be the first sign that a rebound is about to start. So historically oversold here. I don't really know anything about this company other than they are in Stanford here, and I just keep thinking about the Guns N' Roses song where what's his face is like I. But anyway, all right, everyone. So make sure you tune back in. Thanks a lot, and I appreciate it, and I will see you soon.